Hey, I'm Crypto Bo, and if you're just getting into crypto and wondering what some of the top token projects are and what they do and why they're important, then this video is for you. Today, I'm going to look at some of the top market cap coins and explain what they are, why they exist, and what they do. If you're looking for an exchange to go and buy these, then please take a look at some of my reviews, which will be floating right here somewhere. Also, you can look at any of the links in the description, sign up for any of those tokens, and get whatever rewards come along with signing up. Some of those are discounts on trading fees, and some of those are just free Bitcoin. But anyway, let's dive into it. The first coin I'm going to assume you've heard of and know about is Bitcoin. It's, of course, the first cryptocurrency to ever be invented by the enigmatic Satoshi Nakamoto in 2009. Now, Bitcoin is pretty simple compared to all the other cryptocurrencies. It's a pure value token. It's a way of tracking value across a distributed mesh network and a way of arriving at consensus over who holds what balances and how much each person holds. The cool innovation of Bitcoin are basically three things. One, it's immutable. Two, it's uncensorable. And three, it's trustless, which means that you don't have to have a bank sitting as a central intermediary between all of your transactions. As the white paper states it, a peer-to-peer digital currency. And honestly, when I found out about it in like 2013, I thought it was pretty fucking cool. And I still think it's pretty cool, but it is a little bit older. It's also one of the safer, and a lot of people talk about the volatility of the crypto market. Bitcoin has become much less volatile over time. And so you could even see over the course of the last day where, Ethereum has lost 5%, Cardano's lost almost 6%, Bitcoin's only lost 3.5%. So as Bitcoin has gotten bigger, its swings have started to get smaller on a day-to-day basis, and its swings are actually smaller than some of the other smaller cap tokens as well. And so although you're not going to see probably like 40, 60% gains in a day, like you will with some like weird small cap tokens, you're also not going to see like losing 80 to 90% in a day. It's going to be a little bit slower with Bitcoin. You're going to be able to anticipate it a little bit better, or at least generally speaking, and that's how it's been in the past. One thing I do have to point out is this is not financial advice. It's my thoughts on all these tokens. I hope that you come away a little bit more educated, a little bit more knowledgeable, but I'm a fan of the technology, not the financialization of the technology. And so understanding what their use cases are and why they exist, why they're important, that's why this video is here. So Bitcoin was pure value transfer. But right after that, we have Ethereum coming in with a market cap of $337 billion. Whereas Bitcoin allowed people to transfer a digital asset, the Bitcoin token, back and forth in a peer-to-peer nature, Ethereum allows you to transfer data in the same way, arbitrary data. It doesn't have to be about the Ethereum token moving from place to place. It can be a state change of what's called a smart contract. Ethereum was the first of what are called Turing complete blockchains, which means that it functions a little bit more like a database. So if you're familiar with like the database architecture of websites in general and the Web 2.0, you know that a lot of websites are hosted in the cloud. They'll be in like AWS servers or Google Cloud servers or Microsoft Cloud, Azure servers or what have you. You can do the same thing with smart contracts in Ethereum. And so that's what people are talking about when they're talking about smart contracts. They're functionally the back end of Web 3.0 applications. And so you still have to build like a front end and host that probably on a cloud computing server, but the back-end logic of it and the financialization of it are all handled on the Ethereum blockchain. Not only that, but they're secured in the same way, which means you get the security guarantees of like a Bitcoin. You can operate as a trustless, uncensorable, immutable database. Now, each transaction on Ethereum costs quite a bit of money. So you can see, there's like a lot of debate going on right now about the gas fees in Ethereum and how to scale so that when you have centralized servers, you can do an arbitrary amount of calculations per second because you're trusting a central server like Amazon to validate all those things for their computers to exist in the cloud, for virtual machines, which can exist in whatever configuration you want them to exist in. Ethereum, however, has to propagate all the changes that you make to whatever you're interacting with on the system across the entire network, which means it's a lot slower than centralized servers are right now. There's a lot of smart people who are working on solutions to that. The scaling debate is raging in full right now and will continue to rage until we start to see the number of transactions per second that you see in like the Visa network. But even that will pale in comparison to the number of transactions you can do per second or calculations you can do per second in a centralized architecture, which is why I'm going to skip down a little bit to Solana. Solana is basically the same thing. It's a smart contract platform, but they limit the number of validator nodes. You can't just set up a validating node for Solana. They have it sort of centrally controlled, and that centrally controlled architecture allows it to function a lot faster with a lot lower network fees and transaction fees, which is why some people are switching to Solana. Now, people on the Ethereum side, myself included, would say that this centralized architecture sacrifices the distributed nature that Ethereum has, which means that Solana can be censored and may not be immutable. These are things that will be borne out in the near future, but Ethereum and Solana, you can think of as similar platforms. In fact, you could even think of Cardano in that way as well. Cardano and Binance Coin. These are all the native tokens of smart contract platforms. So Ether being the native token of the Ethereum platform, ADA being the native token of the Cardano blockchain, BNB being the native token of Binance Smart Chain, SOL being the native token of the Solana blockchain. So with the smart contract platforms out of the way, let's talk next about Tether. USDT, or Tether, is a stable coin. So where you'll see these wild swings in value with Bitcoin and Ethereum, Tether will stay pegged to the value of a dollar. Now, I'm not a big fan of Tether in general. I think it's much too large with a market cap of $68 billion, given that their reserves are made up of mostly short-term corporate debt, which I think are a pretty risky way to collateralize your stablecoin. Is neither here nor there. The fact is that as long as people believe, that it's worth a dollar and there's no run on the bank, it'll probably stay worth a dollar. I think that Tether actually presents a pretty large systemic risk, so I stay away from it, and I stay away from platforms that rely pretty heavily on Tether. I think, and again, this is just sort of speculation, I think that the next big crypto crash will revolve around Tether, and it'll probably involve something that looks like a run on the bank and people trying to exchange their Tether for actual US dollars. And it's hard to say whether or not Tether will be able to supply all the dollars to the people who will be asking, and that could come as a result of a lot of different things, a lot of different market conditions, including like collapse in maybe like the real estate market or the stock market, as those assets become illiquid, as people are cashing in, as maybe prices drop in either of those two arenas. They may be selling off things like their Tether, like their Bitcoin, and we may see a liquidity crisis in some of those other exchanges. At least that's what I think. So Tether is a stablecoin. USDC, also a stablecoin, falls into these same categories. Now, you may have seen XRP being talked about. A lot of people think that XRP is going to go to the moon or whatever. One thing I think to remember when you're evaluating these tokens is that the price isn't as important as the market cap. I'll say that again. Price isn't as important as the market cap. Think about it like this. The price of Ethereum is, let's say, $3,000 right now. That puts it at about a little bit less than half the value of Bitcoin's market cap. If Ethereum were to overtake Bitcoin and have a market cap larger than Bitcoin, then it would roughly double in price. That would mean it would be about $6,000 per token. Now, let's think about that in terms of XRP, right? XRP has a $42 billion market cap, which, let's say it's, Bitcoin's at about 800 billion, means this is about 1/20th the size of Bitcoin right now. So if XRP were to overtake Bitcoin, it means that the price would go up to about $20 per token. So a lot of people look at these like low token values and assume they're like penny stocks and assume that like, oh, it could go to the value of like 41,000. If it went to 41,000 per token, it would be the largest asset. It would probably, XRP would be worth more money than all the rest of the money in the world, which is ridiculous. It's ludicrous. You could imagine a scenario where it gets like maybe 20 times in value, which is still pretty good return, but that's something to take into account when you're evaluating where best to put your money. XRP, a little bit of background on the project, is a token that is meant to replace the interbank settlement layer between large institutional banks. I hate XRP. I don't think it's a good investment. Take my advice or don't. This isn't meant to be financial advice. But I don't understand why the banks would ever switch to that when they have the reserve currency of the US dollar and they're already building out the infrastructure. Like, why would they switch away from the infrastructure that they had already built and the infrastructure that they're maintaining? There's no reason for them to switch to XRP when they can just implement central bank digital currency or a CBDC, which is probably what like the Federal Reserve is going to do. Chinese banks aren't going to switch to XRP. So I don't really understand the value proposition. I also am not a fan of the fact that XRP has sunk so much money into advertising and affiliate marketing. It speaks to me that the technology is not all that good. And a third thing is they're currently under investigation by the SEC, embroiled in a lawsuit about whether or not they were an illegal securities offering. So XRP has a lot of problems, but a lot of people love it because that it's going to make them rich because they're going to 20 times their money or whatever the fuck. I don't have as much faith. Dogecoin is a lot like Bitcoin in that it is a pure value transfer token, doesn't have smart contract capability like people want it to. Polkadot is what's called a layer 2 solution. So Polkadot is trying to make chains interoperable with one another so that you can transact on the Polkadot chain and that value transfer can be reflected on the native chains of, say, like Bitcoin and Ethereum. And so if they're successful in like bridging different chains and making, like sort of a internet of blockchains, then Polkadot will probably be a pretty valuable token. But that's the project that they're getting behind. It's smart contract related, but it is itself not a smart contract platform. It's a way ordering and consolidating transactions into, larger blocks so that they can be then written onto other blockchains. So Polkadot is what's called a layer 2 solution. So you can also see this in Optimism and Arbitrum, which are both Ethereum layer 2 solutions, which are part and parcel of the scaling debate. Because what happens is they will order transactions a little bit more efficiently and compress transactions so that they fit in blocks in the Ethereum network. The best way to think about it is it's like zipping transactions together so that more of them will fit in the base layer of Ethereum. So we can think of all these that I've talked about so far, Bitcoin, Ethereum, Cardano, all these smart contract platforms, with the exception of Polkadot, as layer 1 blockchains. They are the foundation level on which other applications are built. And so if you look down at like Uniswap is an application that's built on Ethereum. So the Uniswap token has a function. One, it accrues value as you have liquidity provided on Uniswap liquidity pool, but it also gives people some measure of voting power in deciding the direction of the Uniswap project. And so you'll see a lot of these as you get a little bit farther down. So yeah, Uniswap is a token built on top of a smart contract platform. It's a Ethereum native token. Avalanche is again another competitor with Ethereum. Terra is a token that is part of a stablecoin system, the Luna stablecoin system. So it's like the Maker token, which is down here a little bit farther. Chainlink is another chain that's trying to bridge different blockchains together. So it's more of a layer 2 solution. Litecoin is a fork of Bitcoin, maybe one of the most popular forks of Bitcoin. Actually, Dogecoin is a fork of Litecoin. So Bitcoin came along, Litecoin changed the protocol so it was a little bit faster, a little bit easier to make a node and everything like that. And then Dogecoin came along and forked that project. It's the same code base, started developing its own currency as a joke. But these are all layer 1 blockchains. So that's like the top 15 or 16 coins by market cap on CoinMarketCap right now. If you want to see me do more of these, then leave a comment and let me know. But now I'd like to talk a little bit about research. So, now that you know a little bit about each of these projects, what about a project that exists outside the scope of the things that I've talked about? Well, how do you do research on them? I would say that there's 2 main tools that you should use. One is CoinMarketCap, and the other is CoinGecko. So first, let's take a look at Uniswap. So this is the Uni token. If you click on it, then it gives you a ton of information, both about price data, historical data, the different holders of the token, how many different wallet addresses and everything there is. You can also look at the website, so you can explore a little bit more. You can explore it on its native blockchains. You can look at its contract address directly on Etherscan. There's typically more, which is, these are the deployable contract addresses on different blockchains. But there's a lot of information here, but you can also use CoinGecko. And CoinGecko is another place that looks a lot like CoinMarketCap. It's also going to give you a lot of information about the contract, the website, different ways to explore it. You can look at the communities directly, so you can look at their Discord, Reddit, Twitter, everything like that. And it'll also tell you what kind of thing it is. So you can see that in Uniswap, it's a token, it's automated market maker, and it's a yield farming solution. It also gives you a little bit more information about like its market cap to total locked value ratio, or fully diluted valuation versus the total value locked. This is the amount of Ethereum and other coins that are locked in the contract. Here's its fully diluted market cap, which means that it's market cap of both circulating and uncirculating supply, which is a cool thing to know. You can star these sorts of things, and you can just generally do a little bit more research. Another cool thing is you can see where it's being traded and what the highest volume is. So if we rank it by 24-hour volume, you get these stupid sponsored ads for Crypto.com and eToro, and then you can see that about $200 million is being transacted in Uniswap tokens over the past 24 hours on the Binance exchange. So if you're looking at like a lower cap token, you want to know where you can buy it, you can also go to CoinGecko and look, okay, well, where is it listed, and then sign up from there. That's it for this video. If you want to know a little bit more about which exchanges you might want to use, then check out my exchange reviews up here. Or if you want to learn how to avoid scams, then you can look at my series on scams here. I'm CryptoBo. Thanks for watching. Stay safe out there.